Hey traders, I'm excited to introduce our A-RSI indicator for TradingView, a game changer blending supply and demand and crowd psychology for a refined RSI trading experience. With the advanced RSI, you'll get more successful trades, increased pips, and a goodbye to false signals. This next generation indicator adapts to all market conditions, identifying trade setups in both trending and sideways markets. Join me as we explore the A-RSI indicator, a sophisticated evolution of the classic RSI. But before we dive in, give this video a quick thumbs up and subscribe for more content. Thanks. Firstly, let's start off by looking at a trading example. On the chart, I've selected the British pound against the US dollar in the 4-hour time frame. For this example, I've already attached the advanced RSI indicator and signals plus a regular strength index or RSI for comparison. The RSI is a classic indicator that gauges overbought or oversold market conditions based on recent price changes. It's been a staple in technical analysis since 1978, measuring the momentum of price movements to signal potential corrections. However, even with its long-lasting reputation, the relative strength index has its shortcomings. Firstly, it can miss critical trade setups and also provides multiple false signals. These particularly happen during sideways market movements. Recognizing this, our team developed the Advanced RSI Indicator, addressing these and other limitations by incorporating supply and demand and crowd psychology. The A-RSI not only identifies overbought or oversold conditions, but also enhances sensitivity to various price changes. This outperforms the traditional RSI in both accuracy and profitability. Now from the chart we can see, like unlike the classical RSI indicator, the advanced RSI is providing us with a buy alert. At the same time, the classical version is heading back into the overbought zone. Now, once we get the latest buy signal from the A-RSI indicator, we can take a closer look at price action for our final confirmation. From price action, we observe that in the 4-hour time frame, we are currently in an uptrend with the market forming higher highs and higher lows. This buy signal from the A-RSI provides us with a great opportunity of entering the uptrend during a market pullback. Now, once the candle has closed confirming the signal, we can enter our buy trade. For the buy trade, I will use the stop loss and take profit provided by the indicator and let the trade play out. What our next generation A-RSI provides you is with high quality setups like this one, along with a dynamic stop loss and take profit for each trade. Next, we'll explore another trading example using the A-RSI. On the chart, I've selected gold against the US dollar or XAU-USD in the daily time frame. Firstly, let's start off by marking all of the relevant supply and demand zones on the chart. These zones will often get revisited by price, so it's important that we are aware of them. From the chart, we can observe that this was once a supply zone. Then after the bullish breakout, it is now acting as a demand zone, which is active during the pullback. After the pullback away from the demand zone, we receive a buy signal from the A-RSI indicator. This means another buy trade opportunity during an uptrend where the indicator identifies a pullback. Now, once the candle has closed, I will enter my buy trade. For the buy trade, I will use the stop loss and take profit provided by the indicator and let the trade run its course. By entering the uptrend during a pullback, the indicator provides us with a fantastic entry opportunity. Now that we have covered two trending market examples, we'll explore another example looking at arranging market conditions. On the chart, we have the US dollar against the Japanese yen in the hourly time frame. From the chart, we can observe that we are currently range bound between these two levels. And to get the most out of the indicator during these market conditions, it's important that we observe the signals at the top and bottom of the ranges, and thus ignoring the others. Now, once we get the latest sell signal away from a supply zone that has been tested multiple times, we can take another look at price action for our final confirmation. From price action, we observe a bearish engulfing candle when price action previously tested the zone, and upon re-entry, we receive the sell signal. This serves as additional confirmation for our sell entry. For the stop loss and take profit, I will use the values on the right-hand side of the screen because these values are automatically calculated using the ATR. Now, one of my favorite ways to use the indicator is to spot divergences for reversal trading. So next, let's look at what is a divergence and how to use the indicator for these type of reversal trades. For this example, I've selected the British pound against the Japanese yen in the 15-minute time frame. Firstly, a divergence occurs when the price movement of a pair contradicts the movement of the indicator. In our example, we'll use the Advanced Relative Strength Index, or A-RSI. Now, divergences are a crucial signal that will often indicate potential trend reversals or shifts in market momentum. Now, a bearish reversal happens when the price of the pair makes a higher high, but the A-RSI indicator shows a lower high. This suggests that even though the price is rising, the momentum indicated by the A-RSI is weakening, signaling a possible downward reversal. This means once we get the latest sell signal with the bearish divergence, we can enter our sell trade. For the stop loss and take profit, I will use the values provided by the indicator and let the trade play out. Once the trade is running in a profit, you can always move your stop loss to break even if you prefer to turn it into a risk-free trade. Next, let's explore another example. However, before moving forward, if you found this video helpful, would you quickly drop it a like? Thanks. So for our next example, I've selected the British pound against the Canadian dollar in the 15-minute time frame. For this trade, we are going to combine the A-RSI indicator with our supply demand pro and money management to build a complete 15-minute strategy. On the chart, I've already added our supply demand pro and the built-in volume oscillator from TradingView. Additionally, I've unselected the automatic stop loss and take profit options on both the supply demand pro and A-RSI indicator to clean up our chart. Now for a valid buy trade, firstly we are waiting for the supply demand pro to identify demand zone, which is marked like this. Secondly, we are waiting for price action to approach the zone and then reject away from it. Once the rejection has occurred, we are waiting for a buy signal from the A-RSI. Lastly, when we receive the buy signal, the volume oscillator needs to be above zero. Only if all of these criteria are in place can we enter our buy trade. For the stop loss, I will place it below the recent demand zone, and the take profit should be double the size of the stop loss. For this example, my stop loss will be set at 42 pips and my take target is at 84 pips. By using this multi-indicator approach and only trading signals away from tested supply and demand zones, we can further increase our win rate using this next generation indicator. Next, let's explore the rules for entering a sell or short trade. On the chart, I've selected the euro against the US dollar in the 15-minute time frame. For a valid sell trade, we are waiting for the supply demand pro to identify a supply zone which is marked as follows. Secondly, we are waiting for price action to approach the zone and reject away from it. Then after the rejection has occurred away from the zone, we are waiting for a sell signal from the A-RSI, which becomes our entry signal. Then once the candle has closed confirming this signal, we need to take a look at the volume oscillator that needs to be above zero. Lastly, for the stop loss and take profit, I will place the stop loss a couple of points above the supply zone and aim for double the return. For this example, my stop loss will be set at 25 pips above the supply zone and my take target is set at 50 pips. In essence, the A-RSI is a strategic ally for traders, offering a comprehensive approach to market analysis built by experts. Whether you are navigating trending markets or sideways movements, the A-RSI is adaptable, ensuring that you have a reliable tool at your disposal. So, if you haven't already, make sure to visit our website. I would take a closer look at our exclusive TV Champ membership. With the TV Champ membership, you'll gain access to the Advanced RSI Indicator, plus a multitude of other next generation indicators. So, I hope that you found this video helpful. Until next time, happy trading. Bye.